business. We got to sell these business owners watching the program on doing this. How do we get them as financial planners to view the value of getting money outside the business?
Well, one of the key considerations is the risk of that concentration and the illiquidity most businesses have. We know your business is your baby, and everyone hopes that it'll continue to grow and to flourish, and you can cash out. But we hear many stories of that not really occurring.
Right.
I think a great story is what's happening in New York City and San Francisco and Philadelphia with taxi cab drivers. We forget they're entrepreneurs. Right. And who would have thought, you were a cab driver in 2005, you bought your medallion, you're ready to go, and your plan was to sell that medallion 15, 20, 30 years later and cash out. What would happen? Uber and Lyft happened. Right. So those medallions were worth at one point over $1.5, like $1.2, $1.3 million. Now some are worth $170, $180. Wow. And that's what really happens when you really bet on your business 100%. We do think you should always bet on yourself, but there is that benefit of diversification along the way.
Well, and you can have new competitors, which is what we're talking about. You can have, of course, technology changes everything. You can have all kinds of different things that can happen that, you can't see around the corner. And this can create huge challenges. So that's why you don't have all your money in one basket, right?
Right. You also want to think about how this kind of decision is going to affect the next generation. If this is, all of the wealth that you have that you're planning to pass down to maybe your children, making sure that you're planning appropriately for that. If you have something that's illiquid, like Kamila was alluding to, how is the next generation going to be able to tap into that wealth as well? So also thinking not just about you and your current situation, but thinking down the line.
Well, and of course, also the other big thing is our trends. There are times when a certain type of business, and I'll say, for example, things that we are very familiar with, like the investment business or investment firms, they are worth more at sometimes in the market trends than others, right? So at the given time, it might be that somebody says, okay, I'm ready to retire now, but maybe it's not a good time to sell. Exactly. And without that diversification and having money in other places. So what are some places that people, Shardea, you mentioned a couple places people can invest their monies and get that money out of the business. Again, I'm trying to get them excited. Yeah. So where can they put that money? And do they put it into other investments besides their company, the thing they know the best? Do they put it into stocks, bonds, mutual funds, 401ks, all the above?
I think it can be all of the above, right? I think, there is the tax benefits of doing SEP or simple or individual 401ks. There's things of like corporate assets and making sure that you're investing them in uncorrelated businesses. So for example, if you are a real estate firm, I wouldn't advise you to invest your personal assets in REITs in real estate, right? You want to diversify your risk. So if you do have corporate assets elsewhere, maybe in a more defensive industry that isn't as cyclical as yours, there's a ways that you can look in building a portfolio to give you that diversification you need.
If you would like more information about the topics and our guests featured in this series, please visit our website at PlanStrongerTV.com. Also, if you have a question you would like David to answer, please send it to questions@PlanStrongerTV.com.